So on the dry bulk sector, I feel we are in for a bumpy market, at least in the next 24 months. I do feel that order book is a bit too large compared to what various reports are. We tend to report only, let's say, ship brokers tend to report only whenever the vessel are ordered, so when they start the construction and when there is the NIMO number selected. In my view, if we start instead to actually break down the various order book, I feel we are around 12% of the order book is 12% of the fleet is on order compared to the order book. So I am becoming a bit worried. Plus, China is actually quite weak recently, so I cannot see with China being that weak a dry bulk market to actually sustain and going to, let's say, remain solid in the next 24 months. Then, of course, the fleet is aging quite a lot, and it will be aging more and more because we are coming closer and closer to the year of 2010, 11, 12. Those vessels are becoming almost 20 years old, and deliveries in those years were quite large. Those vessels are really uneconomical. So I believe that even if we will see a bumpy market in the short term, it may actually recover relatively quick. So I tend to be positive 2-3 years onwards. But also shipping prices are just too high as of now. So shipyards are asking for new builds, very high numbers. In Japan on a Kamsarmax they are talking about 43 million, in China is between 38 and 39. So I remain a bit negative on the short term, let's say. So in the years ahead, I feel one of the biggest challenges for us as ship owners is going to be the engine of the future. We need IMO to come up with a clear solution. It has to be a global request from IMO. It cannot remain only with European doing something, Europe doing something, and then the US, and maybe at a certain point USA. So I feel that one is the first one. Number two is going to be on the crew. To find quality crew is more and more hard. And last but not least is the digitalization and the cybersecurity. Because with the internet getting on board of ships, with real-time data coming on board, we also need a clear regulation on the cybersecurity and the various regulations worldwide.
I'm Manu Ravano. I'm working at IFCHOR GALBRAITHS. I'm the co-CEO. IFCHOR GALBRAITHS is the result of a merger between two entities which have been working for many decades in dry bulk, tankers and S&P. And today we are lucky enough to have 350 people and 22 offices around the world. So that's how we serve our clients to the best of our abilities and coverage globally of the various markets. The dry bulk market is going through some uncertainties. The main challenge, which is certainly something that the dry bulk market is already pricing in, is that the Chinese economy is slowing. Now, Chinese economy slowing doesn't mean that this may go on for a long time. The Chinese are good at transforming their economies when they need to, and we feel that there could be an opportunity for them to turn around especially the steel and iron complex into one that needs imports. So we might see actually better markets as of 25, second half 25 onwards. We see some bumps on the road, particularly in the next year. There have been good factors up to now, very good ton mile, which has been very favorable for the market. And there has been disruptions. There have been disruptions all over the geographies, though these are slowly ending, starting from Panama Canal and Mississippi. So these may prove a little bit difficult for some markets, particularly the smaller ones, Handy Supra and Kamsarmax and Panamax. Cape size are diverging from the smaller sizes, and we think this may remain in the years, mainly due to the steel and iron complex reshuffling in China. I would say we can sum it up as handling complexity. There are three main factors that dry bulk will have to face and is already facing. The first one, I would say, is a totally new geopolitical setting. It's a new geopolitical era that we have entered a few years back, and that will remain for quite some time. This includes sanctions, this includes lockdown sanctions, this includes also inefficiencies on the various trading routes. So that's obviously something that the owners and the charters have to deal with daily. And this will remain, as I said, because the leadership at the moment is not changing in the countries that are going at odds. So obviously this may take some time to resolve. The second element, I would say, is the increased complexity of the regulations. That requires a lot of reporting, a lot of compliance, technical compliance and also legal compliance to the new regulations, and that is certainly a complex element of shipping today that requires a lot of human resources, a lot of time and energy. So this is something that will remain as well for the years to come until shipping has found a balance between those requests on the shipping industry, which by the way is already quite efficient if you compare to other industries, and certainly will take some time to manage and go through. The third element, I would say, is, as I said before, the China element. China is certainly slowing down and certainly has difficulties with their domestic economy. We're seeing China entering probably in a deflation period. At the same time, this pushes also the authorities to take action in the time to come for changing and consolidating the steel and iron industry. Also because in the next 10 years we're going to have about 500 million tons of iron ore introduced to the market, qualitative iron ore coming from West Africa, coming even from Brazil, some additional tons that can be there, and some from Australia. So these additional tons will actually push the prices of iron ore down, and hopefully someone in China will realize that producing a lot of iron ore themselves, which is low ferrous content, doesn't make that much sense. And so going from about 850, 900 million tons of production might be a good idea to, if there is substitution of some 300-400 million tons, that's a big trigger point for particularly the Capes and Newcastlemax, but also the rest of the sizes. It's going to, of course, have influence on all the sizes. So that's the main challenge, how to handle really that Chinese transformation. And that we will have to see in the coming 12 to 18 months how that is going to pan out.
My name is John Su from Erasmus Shipinvest Group. I'm the founder, chairman, and CEO of the company since the inception of the company about 15 years ago. Well, the dry bulk, as I also mentioned very briefly at the panel discussion this morning, dry bulk absolutely is facing a very, very unique timing at the moment. As said, the asset value is quite high, and then we see that the new building slots in major yards in China, in Japan, they are very fully booked up to almost 2028, 29 even. So that's why we see that the modern tonnages on the dry bulk remain very firm. So on the other hand, we see that some volatilities on the freight market, on TC earnings. So the earnings, it looks like that there's some kind of disconnection between asset value and earnings for the time being. So and also dry bulk market is becoming very, very difficult to predict, even in short, medium, and long term at the moment. So I think that's something optimistic and also something that quite challenging. If we talk about the challenges, I think as again, challenges and opportunities almost coexist, as we say. And I think the challenges overall for all the shipping parties, ship owners, ship managers, I think there's obviously more and more regulations and innovations as well. kicking in already, as we mentioned, the EU ETS things. And this part, I think, is definitely will give different tiers of the shipping market. And then also, as said, maybe it's something good that certain substandard vessels can be maybe excluded out, or their owners will feel very resistant and worried to trade their vessels in Europe or Atlantic. So this can create something that maybe we didn't see in the past. And the other thing that obviously that, as said, after unfortunately the pandemic, COVID-19, we are also entering a kind of a wartime market because the world is in, part of the world is still under, unfortunately, very serious war situation. And then like Suez Canal and the Red Sea still under very kind of limited trade at the moment. So all these kind of disruptions and geopolitical factors is obviously kind of challenges to shipping industry that we also need to observe how the big picture will be in the next few months and years.
Sure, I'm Chris Wiernicki, Chairman and CEO of American Bureau of Shipping, ABS. You know, shipping's at a really interesting point right now. We probably are in the early innings of a decade of change. That decade of change that's in front of us is going to be marked, and we're beginning to see that now by a new language of shipping that's emerging. A lot of discussion on CO2 reduction per ton mile. As you look at the well-to-wake equivalent to that, it's CO2 emissions per megajoule of energy. But you've got a new language of shipping emerging. You have new boundary conditions. We talked a lot about safety, but the other two boundary conditions are availability and affordability of fuels, as well as infrastructure, new technology readiness timelines. So the new global shipping shapers, primarily what we see in front of us, obviously, is the impact of regulations. So what you're seeing is a tremendous amount of challenge. You're seeing a lot of uncertainties that come with that challenge. You're seeing regulatory uncertainty as we begin to kind of bring all these requirements together. We still have not figured out, have not seen kind of IMO and the EU kind of coming together, but you have regional and you have international requirements. You have, so you have regulatory uncertainty. You have obviously fuel uncertainty. So, you know, you see the industry being relatively cautious moving forward. But I think the, you know, the challenges are, how do you continue to operate in this type of environment marked by these types of uncertainties? When you look at the calculus to get to net zero by 2050 that we all face, you know, in real simple terms, we will need a fuel mix of about 30% zero carbon fuels, 70% carbon neutral fuels, which means we need 10 times more renewable energy, 100 times more carbon capture. So by 2050, when you look at that, you're looking at, on top of everything else, a significant steepness of a curve that the industry has to get to. So pace and speed also become very important in terms of how do you get there to meet these requirements. At the what I call deck plate level, as a ship owner, you know, as you look at kind of solving what the challenges in front of you, obviously 70% is in the fuel, 15% is using energy efficiency devices such as retrofits and so forth, and 15% is essentially using data and performance optimization. So 30% is kind of low-hanging fruit that the industry can in fact take advantage of now, and that's what I think people are beginning to focus on going forward. But it's really trying to balance all this in terms of a short game, a mid game, and a long game as we bring all these elements together. I see this evolution kind of from where I sit, probably characterized more as incremental. Although there's, you know, as we talked about, the magnitude and the steepness of the curve are significant. There's still quite a lot of uncertainty. You know, when you look at ship owners in general, you kind of see three swim lanes of ship owners beginning to emerge. You have, you know, in the first lane, you have those real initiators, they're really the go-getters, the real forward-looking ones, the courageous ones that are moving out, really looking at how to move the ball forward. But then you have essentially in that middle lane, what I would call cautious, fast followers that are kind of watching. They're doing some piloting, they're exploring some things, but they're just being somewhat careful. And then you have probably, which not a lot of people talk about, in that third swim lane, there's a lot of ship owners that are doing nothing right now. Because you have to remember the average size of a shipping company is about 5 ships worldwide. So you have kind of 3 swim lanes beginning to develop, all very important, but you're beginning to kind of see that. When you look at an owner's playbook and you look at, okay, what can owners be doing right now? It's when you take a look at that, it's some things really come to mind. One is obviously you want to take a look at the regulations to develop your decarbonization strategies. Several years ago we talked about what I call decarbonization strategy 1.0, which is looking at how do you benchmark your fleet against the CII index, the carbon intensity index. Now with Fuel EU and possibly IMO midterm measures kind of looking and feeling like Fuel EU, you begin to look at decarbonization strategy 2.0 relative to pooling, looking at different requirements, looking at different strategies relative to the type of ship you have, where it's voyaging, and the age of the fleet. You're probably going to be doing some piloting of different fuels, looking at biofuels, looking at carbon capture, probably spending a lot of time looking at potential retrofit options. And from an owner's point of view, I think one of the most important things all these regulations in this industry is beginning to bring together is bringing everyone together. So new relationships are forming. The relationship between the charter and the owner come together through the regulations. Even the ship and the port, government and industry come together. So I think you're beginning to kind of see that. Owners probably will be more wanting to develop more intimate relationships with charterers and so forth. But I think one of the big things that is really important to bring out is I'm not so sure commercial gravity alone is going to get us there. So I think the relationship between government and industry and what government does to support the industry is going to be significant. Because if you look at the 3 boundary conditions that I talked about that we face as an industry, safety, availability, and affordability of fuels and infrastructure, 2 out of those 3 are not controlled by the ship owner. And when you talk about infrastructure, you're talking about a 10-year horizon. So the industry needs help. So the industry really needs for governments to begin to step up in taking the public-private partnerships to a different level, so that we can collectively get there, because this is going to be a team sport. There's no question it's going to be a team sport. There will be some shared responsibility, but I think the industry has to kind of reset itself and move forward in that direction.
Hi, I'm Richard Diamond, an investor in shipping and other equities based in Dallas, Texas. What makes shipping stand out compared to other sectors is the risk reward, that you're able to buy assets with excellent management teams, high yields, at a significant discount to both their net asset value and their replacement value. It's a very appealing asset class in a time of market volatility. Well, I would say it changes from day to day and week to week. A lot of your view of opportunity depends on your holding period. I am a buy and hold investor. I do it for the long term, which I define as 6 months to 2 years. And I think across the sectors, there are interesting opportunities from LPG and companies like Navigator, who have a terminal opening at the end of December, which will increase their cash flow, to companies like Star Bulk and Golden Ocean, which I call the hummingbirds of shipping. Hummingbirds shouldn't fly, but they do. Cape rates are high, and in a market where China seems to be discounted, and the fundamentals underlying the higher rates seem solid.
My name is Zacho. I'm the CEO of Navigator Gas. We transport ammonia, petchems, and LPG. And the good thing is that the outlook for each of those three types of commodities are equally strong. We see strong demand right now, and we just delivered the best quarterly earnings in the history of Navigator Gas in Q2. So it is a relatively strong market, and the outlook is equally good too. We see demand growth coming. Part of it in the petchems comes from our own expansion of our Morgan's Point terminal in Houston, where we are expanding by 55% the current capacity. And that means that a lot more ethylene is going to be pushed into the seaborne transportation market, and we have the ships ready to transport it. When it comes to ammonia, we see also continued strong production growth, and we are there to transport it. We don't see a lot of supply of new vessels coming into that space in the near term, so we see a tightening supply-demand balance in that as well. And lastly, on LPG, we do regional distribution in LPG. We see growing production in North America of LPG, and we are taking our share of the transportation here, so also a good, robust outlook for that segment. We have announced that we will be investing into 1008, which is a production company or company that will develop an ammonia project in North America, in Texas, where we'll be producing 1.4 million tons of clean ammonia from 29-30 onwards. So far we've committed $2.5 million for the FID and so for the FEED study and the pre-FEED study, and that means that we are basically investing a small amount of cash to get the optionality to invest in more into the project once it becomes viable. So we see clean ammonia as a very exciting growth market going forward, and we will want to be part of that development as it goes forward. We also announced that we'll be investing into Blue Streak, which is a CO2 joint venture together with Bumi Armada, where we had signed a memorandum of understanding with Uniper, the UK power producer, for transportation of CO2 from the London area up to Scotland for sequestration. So we see the CO2 market for shipping as a very, very large market that is coming, and we want to have our foot in the door. We want to be well placed to be part of that market. So exciting growth opportunities for Navigator in two new emerging markets.
So my name's Gleeson. I'm the CFO at ADNOC Logistics and Services. We're a maritime energy logistics services provider. We provide services in the energy field on logistics and international deep sea transportation, as well as onshore transportation, petroleum ports authority services, and oil spill response services. So ADNOC L&S has diversified significantly over the last several years already. We began as a business operating offshore support vessels and in activities around the energy fields in the UAE. We've diversified in three main ways over time, perhaps even four. The first is we've moved from offshore support vessels and related services into deep sea international transportation of energy, as well as acquiring new asset classes such as jack-up barges. Secondly, we've moved into new geographies. So we've moved beyond the UAE into Saudi Arabia, Qatar, we're in Iraq at the moment, and we're delivering to more than 100 ports around the world through our activities. With the acquisition of Navigate, We'll be delivering bunkering services in 200 ports, and those bunkering services will be another example of diversification. We've also diversified customer base. So historically, ADNOC made up a very significant proportion of our customer base, and over time that's been reducing as we provide more and more services to third-party customers, international blue-chip customers around the world. And then finally, we've diversified in terms of moving into new business areas, what we call adjacent verticals to the existing businesses that we're operating at the moment. So examples would be moving from shipping now into commercial pooling for shipping, in integrated logistics, moving from contract types of daily chartering to moving into volume-weighted chartering of assets. So significant diversification in our past, absolutely significant diversification ongoing into our future. There are a lot of challenges for shipping in the years ahead. In the very long term, we have to worry about energy mix, what's going to happen with the energy transition and what that will mean, given that the life cycle of our very capital intensive assets is so long. So we need to be cautious when we're building about what the size of the required fleet will be by the end of the lifetime of an asset. We also have to be cautious about safety. So first of all, the health and safety of our crew and our onshore operators in carrying out their normal day-to-day activities, but also we need to be cautious about incidents such as geopolitical risks, what we're seeing at the moment in the Red Sea, the impact that that has potentially on the safety of seafarers, the need to reroute vessels, what's going to be the impact of new technologies as well. So we'll probably see more autonomous shipping over time. That presents great opportunities, but also presents new risks to the industry. And then finally, we see transportation of new cargo types. So we'll see increasing transportation of ethane and ethylene, long-haul, large volumes, transportation of ammonia, transportation of hydrogen, hydrogen derivatives. All of these things are great for the industry, great for energy transition, but they will also present new risks in the industry.
I'm Sotiris Raptis, Secretary General of ECSA, European Community Shipowners Association. The key challenges include, of course, the high geopolitical uncertainty, the enormous challenge of the energy transition, the need to upskill and reskill seafarers, and of course, adequate access to financing for European ship owners. The green transition is an enormous challenge. We need to invest billions of euros for the uptake of clean fuels and clean and innovative technologies. The Draghi report was published yesterday, identifying what we need to improve to enhance the competitiveness of the European economy, including European shipping. The report found that we're going to need 40 billion euros a year for the energy transition of shipping alone. We're talking about a price gap between clean fuels and fuels currently used that go up to 4 or 5 times more expensive. And we need to figure out a way to bridge the price gap and make these fuels available in the market. The crisis is always an opportunity to highlight the strategic role of shipping to the competitiveness of our economy, to open trade, and of course to the security, especially when it comes to Europe, to the security of our continent. People have realized, going through one crisis after the other, how much shipping is key for the energy, for the food and the supply chain security of our continent. We import 90% of our energy, and we export 76% of our trade is facilitated by ships. For us, it's key to engage with the policymakers to make our voice heard in the policy-making arena in Brussels, and of course to make our industry more visible. We're the front runners in the energy transition, and we need to show that what we're doing, the good job that we're doing.
I'm Tim Hansen, I'm CEO of Dorian LPG. We are a VLGC company trading in gas and listed in the US. The future of the VLGC market for the next couple of years looks good. There's a good production and there's a good offtake of the product. We are seeing more ships coming in the future, as it's been a lucrative market the last couple of years, which have spurred a lot of new building orders and also orders for probably the future of ammonia shipping, which probably is, these ships have come a bit early to the market. We do see that market eventually taking off as well, but the deliveries of the ship, as often is the case, is coming earlier than projects are coming. So a bit challenging a bit further out. So I think the challenges in the energy transition for most shipping companies is that to really get going, we need to see the new fuels available, to understand the regulations and have them clear cut so we know which path to go on, because there are too many options at the moment, and the investment to go there is huge, and if you get that one wrong, then it doesn't really matter but how well we do the rest. But in the meantime, I think we can do a lot of stuff on the optimization of the present fuels, of the ship's performance, and no matter what the fuel will be in the future, that's still a great saving to cut down on your energy consumption on board the ships and sail the ships as efficiently as possible. So it's not a wasted effort, but of course we're also eager to get going and to know where our new buildings in the future how they should look like and so on. But in the interim, then we have plenty to do around optimizing the ships with their performance and looking at the various new technologies that can enhance the energy efficiency of the ships.